This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Risks to inflation are tilted to the upside, and risks to employment to the downside. The effects of tariffs on consumer prices are now clearly visible. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses.
Months after U.S. President Donald Trump imposed tariffs on several countries, the United States has been facing a potential threat of inflation and job risks.
This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be.
Federal Reserve Chair Jerome Powell acknowledged that the effects of tariffs on consumer prices are now clearly visible.
The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed.
The job market were rising, but also noting inflation remained a potential threat and that a decision wasn't set in stone.
Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%.
Powell's remarks drew new ire from President Donald Trump, who contends there is no risk of inflation. However, Fed Chief Powell made it clear that Trump's tariffs are pushing up prices in the U.S.